Okay, so I guess we can start. The easiest way is like you guys to introduce yourself a bit and tell us a bit more about projects that you're coming from. So Owen, do you want to start?
Yeah, sure. So my name is Owen Palmer, and I'm the business developer for SpookySwap. SpookySwap is the leading decentralized exchange on the Phantom blockchain. So if you're familiar with Uniswap or SushiSwap or something like that, we're a Uni v2 fork on Phantom.
My name is Bojan. I'm from Liquity. And Liquity is a borrowing protocol, meaning you can deposit ETH and take out a loan in a stablecoin against it, very similar to Maker. And we like to see this used for real-world assets, so people buying houses, cars, motorcycles, whatever, just for your expenses. What I do, for example, and that's why I'm rather excited to talk about this topic today.
Okay, so I think it would be best for us to kind of like turn back and look around what was happening in the last 2-3 years in the DeFi space. So from that aspect, I would like to ask both of you guys, like, what are some positive and negative aspects that help DeFi get where it is right now? So, Bojan, maybe you can start.
I think everything revolves around making money. So there's no need for sugarcoating that fact. So I'll take this as the basic premise for positives and negatives. So positives, just because of the inherent fact or mechanics, how DeFi works, how people can quickly iterate over things, how there are no blockages in terms of capital movement. You can really quickly develop new things, try things out, maybe even test in production. So this results in a lot of innovation, a lot of smart people joining the space because they can deliver and get results rather quickly. And we probably saw developments in those 2 years, 2.5 since DeFi is active, like in TradFi, maybe in a decade or more. So that's really cool to see. Negative, again, around money. Because DeFi is rather a Wild West environment, you have all kinds of people joining it, not with the best intentions. So you need to be very careful not to fall for scams, for rocks, for exploits. And even if you do your best, you can still fall victim to one of those. So that's kind of the very negative aspect of DeFi.
Got it. And you, Owen, what's your thoughts about the positive and negative aspects that got us here?
Yes. Okay, so the positive aspects of DeFi over the last couple of years. I think a great positive is it's allowed accessibility for just the average person, maybe in countries that can't access the finance industry, both in an employment scale. Like, I mean, as in DeFi, people from all over the world can smart people, they can look on GitHub and look what's out there and try to create a project of a fork or what have you. And you can't really do that in traditional finance. It's really hard to spin up your own bank. So it's allowing creative people, smart people to use their intelligence to try to expand. So that's a cool thing about DeFi. I think it's made the average person in some of these countries have access to finances, which has been great. I think some of the negative aspects of DeFi the last couple of years, of course, scams. I mean, that's part of the problem with being an open source community is it's really easy for someone to spin up a project, and some of them might have maybe they have bad intentions, or the other aspect is they're creating new projects. New code, and anytime you make something new, if it's open source, it's easier for someone to look at that code and maybe find an exploit. So maybe it wasn't even intentional, and that's some of the bad aspects of it. But that comes with decentralization. So I think over time things like that resolve themselves. You know, the good protocols continue to exist, and some of the bad ones fall by the wayside. But yeah.
For me, one of the interesting facts when we look like in the last couple of years of development and what I believe that we'll see more and more in the next 10 to 15 years, is this Pandora box of high stakes when it comes to the liquidity, right? Because in the same time, I think one of the driving forces of innovation is exactly that you're building in public, you're launching these protocols because of a lot of money at stake, both sides of people that basically want to exploit these protocols and people that want to secure these protocols are working around the clock. And in my opinion, that's something that is a huge advantage comparing to any other industry. Yes, does it hurt people that are like either not well educated how the protocols work, or greedy, or not paying attention, and for sure like hurt a lot of people. But in the same time, this stress testing that is happening so fast is helping us actually go this fast. So in my opinion, like 1 year in the DeFi, if your protocol is surviving without any major exploits or risk or so on and so forth, is equal to 10 years roughly in traditional finance. And that's something that I think that is like a huge advantage comparing to the traditional finance that we have right now. With that in mind, and because we want to touch base on the sustainable economy in the future, what do you guys think are key ingredients for that sustainable economy in the DeFi space in our future?
First and foremost, I think we need products which have an actual use case and product market fit. Otherwise, it doesn't really make sense to use the product beyond the liquidity mining of mercenary capital which you might apply. So if you don't have that, then you won't stay around for long. The other topic is to have some kind of yield, what we call real yield. So either fees or some kind of other mechanism, ideally paid out in a stable coin or in ETH or in some other blue chip asset which the users can earn, and that some kind of mechanism, self-propelling mechanism is in place which sustains all of that in the long term. Yeah, that pretty much.
Thank you. And you, Owen?
Yeah, so this is the key points for the
key ingredients for the long-term sustainability.
Yeah, so it's a challenge in DeFi. From my own experience, you have to have a product. I mean, the products have to be something that kind of reflect what happens in traditional finance. So you're making products that are basically replacing that, lending, borrowing, exchanges, that kind of thing. So you need to have those tools there to service for the public. Another key ingredient is those protocols need to be sustainable. It's tough. A lot of these DeFi protocols, they use tokenomic models to pay for their developers essentially, and a lot of those run out after a couple of years or what have you. So that's a challenge. In a very competitive market, DeFi is very competitive. There's so many different chains, so many different dApps on each chain. So there's a push to make fees really low, and so how do you balance that? How do you balance that to keep a team working on the product? Because although we focus on decentralization, I think we all try to do everything we can to be as decentralized as possible. It's still difficult to have a product that is truly decentralized. Someone has to be working on it, typically. So you have to be able to pay the team to continue the product running. The other thing, you have to have products that the people want to use. A key ingredient is they need to be reliable. Something I've learned just touching so many dApps is that anytime a new idea comes out, someone writes new code, I hate to say it, but it's really likely that it's going to be exploited. I mean, it's just really likely. dApps they try to get audits and that kind of thing, but it's just really hard. I mean, like I said earlier, when you put the code out there and it's available for anyone to look at, it's likely to get exploited. So the only thing that can give you confidence on not being exploited is something that's had a lot of TVL and it's been around a long time. So it needs to be something, to be sustainable, the user has to be willing to put money in something and believe that it's not going to be gone the next day. So that's got to exist. And then I think maybe a last key ingredient is it needs to be able to exist in the real world. I mean, DeFi has this challenge on facing regulation throughout the world, right? So how do we make it to where all these dApps can continue to legally exist, or not, or maybe they don't have to fall under some kind of regulation. So I think that's kind of a balance we're trying to find right now. So yeah, maybe that's the key ingredients.
Just something I remember right now, one rather big challenge especially for seasoned protocols which if you do not inflate your yield anymore via token incentives or anything, you probably end up with a 3 to 5% range or whatever, which is pretty much what money markets or dividend stocks give you. So why would boomers ape into DeFi? That's the question. So apart from the LATAM and Middle East users who do not have access to internet brokers or whatever. That's one question we would need to solve rather soon, I think.
And to dive into kind of like active participants in our ecosystem, in my opinion, and I guess majority of the people here would agree, the ecosystem is still small. However we feel and how many protocols there are, the whole ecosystem is still young and small. And obviously, the active participants, people not just that are providing liquidity, but people that are building this space, both tech and non-tech people, the educators and everybody, I think that we are just starting out in last 2-3 years, roughly. So from that perspective, how do you guys see, how can education and awareness initiatives help bridge this gap between, for example, traditional finance and decentralized finance?
Yeah, I mean, I think that's a great question. I mean, how do you educate the average person to use traditional to buy stocks, let alone? I mean, I grew up in a country where there wasn't a lot of education on that kind of thing. So then you're trying to bridge the gap of how do you educate people to, or how do you use education to get people to use DeFi, I guess is what it's asking. And yeah, no, that's a great question because I think maybe everyone here who has played around in DeFi has probably talked to a relative or a friend or something and being like, oh yeah, you need to look at this cool dApp or whatever. You know, have you heard? I mean, I've done it. I remember being in a classroom one day and I showed a coworker. I was like, man, look at this website, and I showed him. It was actually SpookySwap before I worked there. And it was just fun. It was a fun thing, and that's how that got his attention. And that's how I did my little education. And I've educated family members. But how do you do that on an industrial scale or something? Yeah, it's a great question. I know I've dealt with colleges, college programs, maybe not traditional colleges, but ones that are trying to spin up education platforms for DeFi. I think in the long term, what you're going to see is as DeFi gets rolled into, or as maybe traditional finance tries to roll DeFi under their blanket or what have you, that they'll try to educate their public, right? You know, they'll just like you see bank commercials or something. How would they get users to start using DeFi? And I think that's probably what's going to drive education long term, is as DeFi becomes more normalized, just because of the competitive nature of it. Like traditional finance has to compete somehow with DeFi. They're going to have to do it, and I think that's what's going to drive the education, probably. Other than you talking to your relatives, that is.
Yeah, to tie into this, I think that the main topic to get more people on board is quality and safe and familiar onboarding, which most likely will be DeFi integrated into payment apps, into the Squares, into the Apple Pays, into the whatever's on top of the base layer. Now, will those companies integrate DeFi or just do their own thing on base or whatever, or something similar? I don't know. But people need to be comfortable, or even in the first place exposed to those possibilities, because we are bombarded with so much information constantly from the screens we are looking at pretty much all the time, that it's really difficult for DeFi or for some protocol to even catch the eye of a regular user. And we should not forget that, for example, here in the Balkans, just 12 to 15% of the people actually invest into stocks or into any financial product. So it's not like everyone around has a broker account or something like that. So, but they do have savings account. Obviously, they do some kind of Robin Hood-esque investments, and approaching people that way in a safe and convenient and familiar way would be the best option to educate and to onboard the new round of users.
I also feel like one interesting thought that I'm having more and more is that I believe that the first step will possibly also be like these kind of like blockchain type of applications that are outside of DeFi that will take a wave of new kids on the block. Like, is it gaming? Is it music? Is it art? Doesn't matter, like social side. Because all of these protocols are having some type of tokenization system or NFT rewards or any kind of the rewards and incentives that have some intrinsic value that you can swap or you can like do something with it, right? So from that perspective, I think that one of the interesting onboarding part would be people trying new games that will be released in the next couple of years, new social apps and so on and so forth. They will earn some type of reward from that system. Yeah, I don't know yet which, like, is it just a token or is it something else? But like when they have all of those things, they will either need to be use those primitives inside of those applications, or they will be incentivized because, I don't know, they earned $1,000 through that and they want to swap it somewhere. So I think that like this early users will come more, sure, like education that, as we said, like all of these kind of like not just the workshops, but like trying to show and tell to people, both young people, both people that are working in IT industry, financial industry, so on and so forth. But this kind of like new wave that is giving the opportunity that is outside of DeFi, because in the end, DeFi, you need, sure, like it's a money to be made, but in the same time, you need to be excited. Like I tried to move so many of my friends from traditional finance, and it did not excite them in the same way. Like for us, it's like a colorful, like up until DeFi, like majority of the finance things were kind of represented as a suit and tie and boring type of industry that only specific people have like a keen to be part of. Where with the DeFi and all of this craziness and all of our ways how we are doing in our space is kind of like giving this opportunity of just being more excited, more vibrant, more colorful, and more approachable for the people. But in the same time, I do believe that how we are developing these other niches inside of the blockchain space will have this opportunity of teaching people how to be part of the gaming ecosystems and then teaching them how to swap or use the DeFi primitives and protocols from the things that they earned from these systems. Let's also touch base on the how can DeFi contribute to financial inclusion and empower individuals who are currently excluded from traditional finance system. As we know, currently, like there is like a lot of places on this planet where people are not even connected with traditional finance system. They don't have a banking accounts. They don't have the access to like a lot of these traditional finance instruments. And even today, like there is no, like in the banking system, there is no the same set of rules for us for our private bank accounts. And can we give our money with the same interest rates to be used as the monies of like different bigger entities that have tens and hundreds of millions of dollars. So from that perspective, how do you see the empowerment and everything happening for the unbanked?
I mean, we see it play out in life pretty much in zones which are inflation ridden or have some kind of capital controls, be it LATAM or Turkey, Middle East. So that is a use case which is working out fine and as intended. But there are a lot of issues there with off-ramping and with regulatory pressures and with legal exploit. Like, for example, if you go to Istanbul, you will pay 15% fee to get your USDT out or whatever. So it's not too cool to lose 15% of your capital on the broker or on the provider, service provider. But yeah, in general, that is a good use case. We just need to improve on the rails, on the access to funds, and also to DeFi, because those people are just holding US dollar in a digital form to protect themselves from inflation, pretty much, not doing much more about it, which again, education comes in. But how to do that is a rather difficult problem.
Yeah, no, it is a difficult problem. I think DeFi has provided a lot of accessibility for the third, fourth world. I think in maybe even the first world, you know, there's a lot of challenges with just trading assets. There's a lot of gatekeepers. Big financial banks and brokers and that kind of thing, and DeFi allows, I think we tend to call them degens. It allows the degens to trade any asset they want. Well, and I shouldn't say any asset, but they are able to trade tokens at least. I would like to see to where a lot more assets become tradable in on blockchain. I think that would allow more accessibility to kind of the average person. You know, if you want to buy a stock in Apple or something like that. I think that would be really cool to be able to do that on chain in DeFi. I think that's an accessibility thing that isn't there yet. I know it can be done. I think maybe some people are doing it, but that's something that I would like to see become more accessible. But I think DeFi has allowed the average person that's played with it to have more financial access to tools that they didn't have maybe in TradFi. Yeah.
What do you guys think about our responsibility as these teams that are building in the blockchain and for a sustainable future? To give you the example, like, so there is this team from the Balkans majority that is called DeFi Saver, and basically what they're doing is automations on top of your assets, and you can basically like use the automations there to make a positions where when price volatilities you can kind of like be safe instead of like getting wrecked and lose money because you did not have some stoppers and so on and so forth. And I'm giving this example because one of the things that I love with that team is whenever we are talking constantly, hey, why don't you add this asset? Why don't you add this chain and that chain? Their approach is like, sure, there are others that will do that, but we really tediously want to approach the security side of this. And if we are really tedious on like adding these things, it's intentionally slow. And we're happy to add just the projects and protocols that we are super comfortable with, which is like both how we feel as a security team that is checking all of these things, but then in the same time, like how long these protocols are battle tested. What are some of the risks there with centralization, decentralization, Oracle, so on and so forth. So from that perspective, I think that each team that is building inside of the ecosystem has the responsibility to be kind of like a stoppers. Doesn't matter what hype is saying, doesn't matter what users are telling, like even if they're like negative, why you don't have this, I want to farm this 1000 API protocol and so on and so forth. So in your opinion, what are some of the key ingredients in a good team, in a quality team that is building in a DeFi that can drive this responsibility for the sustainable economy of DeFi?
If you want, I can take this one first. So I actually really like this question because this is something that I've faced working for Spooky this whole time.
I just made up the question. So
yeah, I like it. I like it because it's been a big challenge. I've seen how I mentioned earlier, Spooky swaps on Phantom. Phantom Foundations kind of face the same problem that you brought up. Is we have this issue with anytime. I'll give one example. Anytime we whitelist a token, and that's essentially putting it to where the token is visible on our exchange, a lot of people automatically take that as us saying, "Hey, this token's okay. You know, this is not a scam. This is something you can trade safely." And because our users look at it that way, and I'll go back. Phantom, I was talking to them, Phantom Foundation, and anytime they do a tweet, they retweet a project or something like that, they face the same problem. They think it's an endorsement. They think they're endorsing this product. So how do you as a team balance this where your users are looking at you is saying this product's fine, this product's safe, you're endorsing it. And us also trying to balance that we're decentralized. Spooky Spot really values decentralization. We do everything we can. I think we were the very first DEX that ever decentralized token buybacks. So it's really a focus of ours, but then how do you balance that with your user expectations? And that's a really tricky thing. So as a team, for that whitelist example I brought up, we have to go out of our way to look to review their contracts. We try to see if they've had any audits. We try to make sure there's enough liquidity. Is the liquidity locked? Personally, I think maybe the right way is to eventually move those kind of decisions completely decentralized, and it's just the challenge is we have a responsibility when our users think we're endorsing the product. We don't want to whitelist a token and then our users think it's okay and then they get rugged or what have you. So that's like that's one responsibility we have. The other responsibility I think as a good team is to do your best to have safe code. I mean, if you're being irresponsible and writing new code, no matter how good you think you are, it's like I said earlier, it's really likely to be exploited. It's really likely. Really smart people are looking at everyone's code. That's probably a smarter person than you that you're writing it, and they're going to look for an exploit. So you have to do everything you can to make it not exploitable, or don't do a bunch of crazy stuff. You know, maybe make a slight tweak to UniV2 code or something. You got to be really careful because once there's a lot of TVL in your DApp, really smart people are going to target it. So I think that's something you really have to do as a team to be as responsible as possible. And I think part of the danger with the non-teams is they feel kind of protected from that, and it's challenge. I would say this: I don't know if anyone works for a layer one here, but you really need to value the teams out there, especially in non-teams that have made really reliable product that are really responsible to you. You need to really value them. I'm talking for my own benefit here, but you really need to really value those dApps because it's hard to find. It's hard to find, especially in non-teams that are really reliable and that make good decisions. But yeah, anyways, talked enough.
I would like to give a shout out to DeFi Saver first. A really great product. If you're using Aave, Maker, Liquity,
it wasn't paid. Just to be clear with everybody, it wasn't paid by DeFi Saver. We just really like the product.
But I'll give you my wallet later. So if you're using Aave, Liquity, Maker, and want to make your life easier, definitely check them out. Responsibilities to the user. First responsibility is to do your due diligence, testing, security audits, etc., to make your product as safe as possible. And this also means that ideally it is only governed by code, so code is law. No human intervention possible, because this reduces the attack factor significantly. But it's very difficult to build something like that because then it's out in the wild and you can't change and tweak and adjust and add assets or whatever anymore, which is really difficult. It's like your baby being born and you don't touch it anymore. But this is pretty much what we did with Liquity. So Liquity contracts are immutable and there is no governance nor anything which can change that. And I think we should just build products, write code, and offer reasonable support to the users. But then if you're introducing a lot of hand-holding and ticketing systems and I don't know what kind of walkthroughs and guided tours, then you are becoming a centralized entity, and this brings with it a lot of regulatory and legal challenges. And we at Liquity kind of don't want to go down that road, so we kind of have extensive docs, we have videos, things like that, but we do not handhold users except answering questions on Discord, of course.
What I really like is that I'm seeing in the last, again, 2-3 years, that more and more of these both Anon and non-Anon teams are kind of like trying to open source what they learned and how they actually approach the security. So as you said, like one of the first roles is the immutability of the contracts. Then from the other side, what I really like is I spent like a bit of time around the kind of like Earn ecosystem and try to learn as much as possible from them and their security practices. As, like seeing people like that open sourcing or publishing their ideas, how they approach, what is step 1 and level 1 of the security that they're looking into, what's level 2, level 3, level 4, how they kind of like approve these things. And still like the mistakes are made, like still it's a learning thing that people are giving their best to figure out. But the cool thing that I see more and more is this kind of like community working together to try to figure out what are all of the safety measures that we can suggest to each other and help each other to be better. One of the beautiful things that I really like about this industry is like, if you connect, and multiple times I was in this situation where I'm connecting 2 teams, and just like being there and seeing how they're helping each other, like, hey, we checked your contracts and we're implementing this, but heads up, we saw this and this, and that can be possibly improved by this, and vice versa, and just like people helping each other out. Then like these best practices of like, again, like, yearn and safe using, for example, tenderly simulations before people actually ape in and put the assets there, or before people are signing transactions and just like seeing if that transaction will pass or not, and so on and so forth. I think that all of these bits and pieces are kind of like things that we can all work together and continue working together in order to make some kind of open source public good suggestions to each other how we should approach, and just try to rate all of these approaches per people. Because if you have this kind of like community together figuring out what are the important things without bullshit, then what you have is opportunity to call each other out when we're not doing things like this. One of the things I loved that Bruno from Remark taught me was that Polkadot was one of the first, and I think still one of the only ecosystems that you can't easily just like do something with a governance vote and done. Like if you see like we have more and more dramas around governance voting and snatching governance voting and so on and so forth, and we have this situation where you can deploy any type of code in majority of protocols just by 5 engineers agreeing to do something. But if you have mechanisms in place where you have, sure, is it slower? Like to have like this mechanism of like a couple of days of the discussion, couple of days of checking, couple of days of voting, sure. But I do think how we are growing as an industry, I bet that sure now when there is like 100 million, half a billion TVL in some protocols, we are fine. But like let's imagine that we get to a couple of trillions in protocols, right? Then we don't want to one-click deploy things, fuck it, let's go in production, right? Yeah. So that's an interesting thing that I'm seeing more and more. Do you have like to add something on that or?
Yeah, I've got a comment about so. I think since we were talking about security, I think in order to be I guess the talk is of stability over the long term is to have safe products. And I think one thing that's kind of limiting us right now is how we do audits. There's some audit firms that audit code. You pay them a bunch of money. They have some people look at it. And I was talking to someone recently at a different conference, and they were saying something that I hadn't heard, and I'm sure there's other services, but this particular service, you would put money, like let's say 100, rather than paying it to a particular audit firm, you put a bounty, $100,000, and you release your code to the public essentially, and then people would work to find exploits to get that money. And so then it would be kind of like a decentralized way of auditing code. I think something that really needs to happen to be sustainable is you gotta somehow cut out a lot of these exploits. Yeah, imagine putting $1 trillion on some product and some guy in his basement, exploits it or something. That's how you get an industry shut down, right? I mean, banks are backstopped by governments. We're not backstopped by anybody yet. So that's something, and that's using a decentralized way. I mean, I think that's the thing with DeFi is we're focusing on decentralization, and if we don't, we're just gonna end up another version of TradFi. So how do we find decentralized solutions to stay sustainable. If we want DeFi to exist, we have to have some kind of decentralized way of doing these things that TradFi does. I think that's what we would all want. And then that's a challenge, figuring out how to stop hacks and exploits and that kind of thing. But I thought that was a cool solution.
One issue, maybe not an issue, is that decentralization is to a large degree only a buzzword, because what we have now is just on-chain finance. If you look at L2s secured by 5 of 9, multi-sig, etc., that's not really what I signed up for. But do people care to a large degree? I guess no. Otherwise, they wouldn't be using those protocols or those chains. And yeah, but I mean, money is king. People will go where there is a high APR, and that's pretty much the bottom of it. How, when this will change, we'll see, I guess.
I guess with more people, I know that this sounds fucked up, but like more people suffering, more people get wrecked, more people will think about that. So maturity of the ecosystem. Because like, sometimes I got into these debates where people are explaining to me, yeah, but the things that you said, like, yeah, multi-sig, yeah, this, yeah, that, 100%. We are not decentralized, 100%. But is it like step-by-step thing? And can we do it right now, immediately? Maybe for some things we don't have the answer yet, and we are working on it. But then I think it's like also maturity of our general ecosystem.
Yeah.
Yeah. How we are like spending more and more time, more people getting excited, more people figuring out nitties and gritties, bits and pieces and everything. We're kind of like building this money Lego that we are constantly talking about. And yeah.
With time, people will get kind of bored of the APR games and will slowly allocate more capital to the blue chips, even if only at 4% APR or whatever, but they will feel comfortable parking their money there. It will be easily accessible, it will have a good yield, it will be, I don't know, transferable in a quick way, which are all positives to the TradFi system. So with time, I think this will happen, but there will still be farms. But you see that people ape for 2 weeks, and then when it goes from 250 to 25%, they move the capital to the new party again.
Owen, last question for us here is, so we now have what? Aptosui, Polkadot, Solana, Arbitrum, Optimism, Moonbeam, Polygon, ZK Sync, Ethereum Mainnet, Starknet, Near, and so on and so forth. I guess like I missed like 300 more L1, 2, 3, 4, 535. How do you feel and what do you think about how this kind of like fractionalization and tribalism is influencing the DeFi sustainability? Like, what do you think? Is there some positive aspects? Are there some negative aspects? What are your thoughts?
Positive, negatives. Yeah, I mean, it's basically there's new L1. I mean, I talked to a lot of them. There, I mean, over the next couple of months, there's a bunch more launching. And they all want users, right? They all want, Phantom was a great chain with a lot of users, still has users, but everybody wants that. Well, there's only so many users, right? I mean, we don't have 7 billion people using a blockchain yet, you know? So I think it's just kind of diluting everything. Maybe it's offering new chances for some dApps to go multi-chain and maybe survive for a little while we're in this bear market until we see things turn around. I think the other aspect of it is it's adding competition, right? It's adding a lot of competition, and the good chains will be alive at the end. I mean, I guess that's what you would hope. I guess that would be the positive aspect of it.
Thank you, Bojan.
So teams are motivated to build those solutions, or whatever you want to call them, because VCs are throwing money at them. They get money, users get an airdrop. This works for a couple of months or maybe a bit longer, and then what do we end up with? I don't know. I guess people will get tired of it with time, and maybe better things will develop out of it.
Okay. Well, that's it. Thank you, guys. We're on time. Thank you guys for listening. And if you want to speak with Bojan and Owen, I guess you can see them here in the venue. So thanks, everyone.
Thank you.
Thank you.